It's really very great pleasure for us to see all of you here, to host you, to welcome you. And really great to see lots of CSD managers and executives in Turkey, in Istanbul, and in our financial center in Istanbul. After finishing the starting part of the summit, opening remarks, actually the discussions and maybe the productive parts will start with this panel, and we will be going on for 2 days till the end of next day, tomorrow. And I hope everything will be very productive and we will have good outputs to collaborate more, to integrate, to develop all our markets much more than before. And the subject of this panel is strengthening capital markets and regional collaborations, which is the most important and the valuable target of this summit, actually. And I just want to say a couple of sentences about the focus. As all of us know, actually, we already mentioned lots of things about this kind of things. In today's world, we are facing with lots of dynamics, different issues in political, economic, and social, and also technical areas. Especially during and after the pandemic, during the last 3-4 years, we tried to manage lots of disruptive difficulties in all our countries. Those affected directly or indirectly, financial, business, and our markets as well. On the other hand, digital services and instruments have deep effects on business models and also in local and global markets. And all are very related with our markets and our regions. Central securities depositories have crucial roles in markets and investors to provide trust and business continuity in such a dynamic and complex world. After presenting the focus of this panel, first of all, I would like to also welcome, of course, our very valuable participants, panel participants, speakers. We have speakers from very far away, even from Americas, from Asia Pacific, Africa, and Middle East. It's a good mix of actually all regions. The question is that, could you please share, firstly, general information about the markets in your country and your region? By considering all these aspects, what do you think about generally developments to strengthen capital markets, especially from CSD business point of view? And the second part will be related with the collaboration. Do you actively work for collaborations with other countries and regions to manage all this kind of problems and difficulties and uncertainties? And if you can also give some examples, we would be really very happy. And please tell us your ideas. What can we do else to develop more our markets and to strengthen collaboration? Please, we can start with from Saudi Arabia. Please, let's start from there. If you
sure, thank you.
If you are okay.
Yes, of course.
Yes, please. It's your turn.
Thank you. If you allow me, first I would like to thank you, the Ekrem and MKK team, for hosting us and for arranging such an amazing event. And a special thanks to MKK team, AMEDA and AECSD President and Secretary General for all the efforts for making us feel welcome here. Thank you very much for that. So if you allow me, I will just start with just a brief about the Saudi market. So recently there have been a lot of development in the Saudi market, which resulted into making the Saudi market one of the top 10 markets globally by market capitalization, with a market cap of around $2.7 trillion. And with this growth, also more issuers and more investors and more investment inflows comes to the market. So I'll just give a few numbers as an example. Issuers were, or listed securities were around 100, 120 by 2016. Now we have more than 400 listed securities and all stock exchange boards, including fixed income and equities. Where, for example, number of foreign investors, back in 2017, we had around 100 investors only. Now we have more than 4,000 investors with around $88 billion investment. Of course, the Saudi market is still driven by retail. It's a retail-driven market. However, most of the investments are held by institutions. Around 88% of investments are held by institutional investors. These are few of the development that happened in the Saudi market, but with all these development, we as Edaa, the Saudi CSD, we had to also cope up with all this market growth. So we started few years ago with what we call a post-trade transformational program. This program resulted into establishing first a clearinghouse company, Maqasa. It's a new company who started to clear cash market and derivatives in the Saudi market. And also at Edaa, our CSD, we have replaced our depository system to a new state-of-the-art system developed by NASDAQ. This project was one of the biggest projects that we've worked on in the last few years. I'm sure everyone knows that changing a CSD system is not an easy job. So we've done it successfully a few years ago. And with this system, many new enhancements came, such as straight-through processing of ISO messages, giving more flexibility to market participants for the settlement. For example, the settlement in the Saudi market, the default settlement is T+2. But with all these enhancements, we've allowed more flexibilities to our market participants, especially for negotiated trades, for example, where they can choose between T+0 to T+5. With all these changes also, we are currently working on phase 2 of this system, where we will be able to connect through SWIFT to give our market participants more flexibility and enhancement. These are maybe a little bit few of the things that we've been doing, and we are also working on implementing a new collateral management system in the Saudi market, which will help market participants to facilitate and manage their collateral more efficiently. They will be able to mobilize and move their collateral easily through the collateral management system that we are introducing. This is just maybe a little bit few of the changes that we'll be working on, but you've mentioned, if you want me to continue, the second part of your question, which is collaborations. Because I believe all what we have done is just part of our collaborations with other CSDs, regionally and internationally, where we exchange information and knowledge. And this is maybe AMEDA ACSD is a very great example of how to collaborate and share knowledge and experiences between the markets. So Edaa, the Saudi CSD, and Saudi Tadawul Group, we've signed many MOUs and agreements in the recent years. Maybe I will start with the last agreement we signed with MKK, for example, to collaborate. But we've also signed other agreements in the region and very far from here. This year we signed an agreement, for example, with the Johannesburg Stock Exchange. We've signed an MOUs with the Shenzhen Stock Exchange, with Shanghai Stock Exchange, Hong Kong. But I will go also back regionally where we started. We started with an MOU with all the regional CSDs, such as Bahrain, Oman, Abu Dhabi, Qatar, and Kuwait. In addition to MOUs and agreements, we also established a link with some of the regional CSDs. We already signed an agreement with Bahrain Clear, for example, to facilitate cross-listing. We signed another agreement with ADX, Abu Dhabi Exchange, and with Muscat Exchange as well. As a result, for example, of the ADX agreement, we had the first dual-listed companies between Abu Dhabi Exchange and the Saudi Exchange. But we are also working toward more MOUs and more collaborations with the regional CSDs. And if I may comment on the last part of your question, is what needs to be done. I believe These MOUs and agreements are very helpful, very useful for all of us. What needs to be done is maybe to activate these MOUs and agreements. To each of us, each of CSD needs to have a dedicated team to activate these agreements, to have a regular meeting, share knowledge between the CSDs, and to activate all this knowledge sharing between the CSDs and the activities that we are doing. Thank you.
Okay, thanks a lot to Mr. Bandar ALKAHAİL. And another important speech will be held by Imelda SEBAYANG. She is coming from far away, from Indonesia. And actually, it's really very important to have something concrete, more than just talk, actually. And it's really very valuable for us as MKK. I mean, we have really very good participation with Indonesia. And they're using the e-general meeting solution for 4 years after the pandemic. And we are collaborating and developing together some new solutions. And it's really very valuable for us. Could you please, it's your turn, mention first about the Indonesian market and then collaborations. What do you think? Please.
Thank you, Mr. Ekrem. And thank you, ladies and gentlemen, the chair and the members of ACSDA and AMEDA. Thank you for the opportunity. Maybe that Dr. Ekrem, before I start sharing a brief on our capital market, maybe I need to share a bit more on Indonesia to show how complex our country is. It is the world fourth most populous country in the world with 280 million people. And then we have, and that 280 million people scattered over 17,500 islands, and mainly in the 5 islands. And then we are actually the largest Muslim country, around 225 Muslim people living in our country. And then out of those 5 islands, the people itself concentrated most in Java Islands, around 40% are living in Java Islands. Whereas the capital city, still in Jakarta, where we live now, consists of 11.7 million itself. So the reason why I have to share this information will relate to the complexity and the challenge that we are facing, and then also the risk that we are facing to drive us in the building the solution to address all the challenges and risks involved in this type of geographical characteristic that embedded in Indonesia itself. So if you see in the next slide, please, some statistic there.
Am I in charge?
Oh. Okay. Sorry. Thank you. All right. Thanks. So, so what is the development post-pandemic? And maybe I can say post-pandemic followed with so many global turmoil, and then now we are facing in the high inflation environment. On the market capitalization itself, actually we are not doing that bad. Since the pandemic, we are almost increasing our market capitalization by 70%. From 447 billion to become, as per now, our market cap is around 791.97 billion. And as per daily trading turnover, we increase our daily trading turnover in stock around 30%. As per now, we record around 762 million on the daily trading volume. And then for the Jakarta Composite Index, we hit the bottom index during the pandemic in 2020 is around 3,900. However, I think last month we actually hit the record high index around 7,900, but a bit going down again now. But at least still the highest for the past years is we are currently record the GCI at the 7,600 level. So the capital market not do, despite the whole challenge, global and regional and also domestic itself, I think the capital market doing quite well. And on the listed companies, now there are 936 listed companies in the Indonesian Stock Exchange. We are number 2 in ASEAN countries. And then we record asset under custodian around 555 billion US dollar. And then this is part of the interesting part on the shifting of the portion of the investor pre and post pandemic. Pre-pandemic, 60% of the investors are actually coming from foreign investors. However, the pandemic really changed the whole dynamic of investment characteristic in terms of investors, because like you see in the bottom of the presentation, we record 13.6 million investors at this point of time in capital market. Just to let you know, before the pandemic, Indonesia only record around 3 or 4 million investors. It's a pre-pandemic. And then during the pandemic, in 2020 and 21, the investor grow up to 12 million only in pandemic. And then where the investors coming from? Most of them, 98% coming from the mutual fund investors. And if we break down into more detail, the mutual fund investors is actually coming from the millennial and Gen Z. And they are using the fintech platform. So basically, all those challenges in the pandemic on one side, despite the challenges on one side, is kind of a shifting all the investors' picture in Indonesia, and then bring up the investors' level to maybe like almost 5 times. So that's why, if you see in the pie chart there, at this point of time, the majority portion of Indonesian capital market investors are actually coming from domestic, which is almost 60% coming from domestic and 40% coming from foreign investors. So there is a little bit shifting there. So, and then apart from those numbers, to answer your first and second question, what is the development apart from the investor side? What I'm share with you just now is from the investor point of view. But also there is a development in intermediaries. Of course, we are not living in the easy world now. The intermediaries continuously facing the higher and higher pressure to bring their cost of doing business down. And then the financial risk that they are facing to grow their business is getting higher, because they are not talking about growing now, but I think most of the intermediaries in Indonesia capital market is talking about survival. So when we talk about survival, there is an increasing risk of regulatory breach. So there is an emerging new risk since the pandemic across the financial intermediaries in Indonesia capital market. And then, apart from that, the pandemic also bring up a new segmentation that becoming our focus also as a CSD is actually on the crowdfunding itself, because Indonesia 65 to 70% of Indonesian GDP is actually supported by small medium enterprises. And those small medium enterprises require an alternative source of funding, because majority of that segment is not bankable. So since the pandemic, there is an emerging need of securities crowdfunding. And now one of the focus of KSEI as well is actually building a platform to integrate all the participants in the crowdfunding ecosystem, connecting the dots between the investors, intermediaries, and issuers into KSEI platform to ease them to doing the business, to bring down the cost of doing the business, but at the same time to allow the regulators and the supervisory to do surveillance and monitor on the day-to-day transaction. So that's the some development on what happened in Indonesian market. I'm not talking about the increasing risk of cybersecurity, because I think everyone facing the same risk on that subject, because I'm talking about what is unique to Indonesia post-pandemic. So facing that situation, to answer your next question, is we can't live in isolation. A collaboration is the key. And thank you, Mr. Ekrem, and the members and chair of AECSD to accept Indonesia as a newest member, the newbie in the ACSD. So that's part of the collaboration that we always try to enter and to grow. We also have a collaboration apart from the association, like you say, Mr. Ekrem. I think one of the real example of a true collaboration is actually between Indonesian CSD, KSEI, and MKK, which is proven real to address the issue during the pandemic, where MKK support us in the launching of e-proxy and e-voting in the AGMs. We launched it in the 2020, just right when the lockdown started. This relates to the first information I shared with you. Indonesia have 17,500 islands, and the issuer scatters over 5 to 6 big islands. And normally, during the AGM, the market participants or the investors, especially the domestic one, they need to fly there. So during the pandemic lockdown, no flight. So that's what I think the solution come at the very right time. Frankly speaking, at that time, I was the market participant. I'm not joining yet as in the KSEI. So I feel the benefit of that. So, and then at this point of time, that e-proxy and e-voting, I have to share with you this amazing number of utilization to show you how the solution is really well accepted, especially our Indonesian Financial Service Authority also make the use of this system as a mandatory. So it's very good in that sense. So as per now, this platform has been used by 884 issuers, and then there has been 1,233 AGMs conducted through this platform, and then 24,000 e-proxy users have been using it, and then 12,900 e-voting users have been using it. So I think the data and the result speaks by itself, more than words, like you said. And then to address your last question and on the future collaboration, I might say, for now I can see two things here. First is actually the information I shared you in the beginning. 225 people in Indonesia are Muslim. We are the largest Muslim country, meaning we are the largest Muslim economy. I think this part of Indonesia need to be developed further. So if through this, joining this association and then either bilateral collaboration with any countries, for example with MKK and Turkey, I think one of the potential area to be developed with Indonesia is actually how to bring Islamic economy in Indonesia to the next level. And also the second one, with the issuance of the new omnibus financial sector law in Indonesia, in allowing KSEI to expand their role beyond capital market now, I think we can also talk in the bigger scope. Plus, Indonesia is more open up now with the new regulation allowing Indonesian mutual fund in investing into offshore fund on fund. Now we can explore the opportunity whereby how Indonesia with certain regions or certain countries, either through multilateral or bilateral, can look into that specific area as well. So a lot of things, I guess, we can do, especially bear in mind that only 13 million capital market investor in Indonesia. If you divide it to 280 million, our capital market penetration only 5%. So a huge potential there. To grow our market, certainly we need to collaborate with all of you here. So I thank you for the opportunity to have me in this occasion today. Thank you, Mr. Ekrem.
Thanks a lot. These are really very valuable information and sharings about the Indonesian market. Thanks a lot. And now, the speech turn is Mr. Haruna Waziri from Nigeria. Please.
Thank you, Dr. Ekrem. I think a lot of compliments has gone through the organization of this conference. Congratulations and well done. I don't have a presentation, but arriving in Istanbul, I found myself very well at home, and I tell you why. The traffic is aggressive, the driving is aggressive, the conversation is aggressive, and so when I woke up this morning, I'm like, how aggressive can I be at this conversation? But, you know, it's a wonderful place, and it has a lot of history, so it's wonderful to be here. But having said that, I think the effort also MKK is making, it's about collaborations, touching regions and trying to reach out to do a lot of things. And I think the concept of this panel is to talk about what are these regional collaborations, how do you strengthen them, and what are the advantages to do that. The good thing about collaborations is that it leads to shared benefits. When you do collaborate from a regional or from a common ground, what you share are those benefits that each of you carry and put on the table, which includes things like deeper capital market penetrations, because issuers are able to raise capital across geographies or across regions, without which, if they were standing alone in those markets, there will be limitations on that. So for me, that's very important, especially coming from a smaller market like Nigeria, despite the population that's like Indonesia, by the way. Surprised to hear that we probably share common numbers. And eventually, we also have about 15 million unique IDs in our system, compared to 220 million people. That's actually a scratch in terms of retail business. There's a lot to learn from what you have done. But future-proofing capital markets, the synergies have to be across regions, like you're doing right now. It improves liquidity, it brings in innovation because you learn from each other, and also, to a certain extent, it enhances investor confidence, because when investors begin to see that you've democratized their risk across markets, then they become more confident and feel that, you know, these are markets for me to actually participate. And we've seen it with AMEDA and AECSD in terms of that regional drive, also to better risk manage, you know, if you look at it from that context, because different markets allow you to, you know, diversify your risk in terms of either the products, whether it is the issuers, or even the processes and those things that are necessary for that infrastructure and practices to actually occur. And that collaboration typically would help. So for us, we have what we call West Africa Capital Markets Integration Committee, which a few of our members are here within the West Africa region to even try and connect our markets outside what the ASEA is doing from their Africa linkages, if you like, program, where, you know, I think they're taking 4 or 5 markets. I think it's Egypt, Lagos, Johannesburg, Nairobi, I can't remember all that country, to try and connect them and increase liquidity from what's it called now, a trading perspective. And I think that's a good initiative. A lot of heavy lifting has been done, but more of that has to be done for that to you know, for that landscape to be able to be useful for investors and for issuers. But I think in the heart of this is also technology. Africa is a fast-growing continent. It's very young, it's dynamic. And I keep telling people that if you're not, today's infrastructure is actually your phone. If you don't have whatever you're doing that ends up on a mobile phone or a tablet or some kind of device, a smartphone that you use, then you don't get to approach markets the way they should be. You're not able to tap into what investors want. And then by extension, you are diminishing the capacity of that infrastructure. So for us at the CSD in Nigeria, it's something you don't see on our website, so there are no numbers to determine all of the statistics I'm likely to give you. But there was a deliberate attempt to focus on three things. One, because we're a huge market in terms of numbers, we believe that retail is a key to it. Despite the fact that, the GDP is not comparative to some emerging markets, but the volumes are there to actually drive it. And we're seeing significant increase in terms of participation. So what we focused on with the government was, ID was very important. Who is this person? Where does he live? How old is he? What does he do? All of that KYC that's required in a biometric way, such that, as you know, many African countries don't have, and I can speak for Nigeria, I don't know others, don't have a proper register of births and deaths. You don't have a social security number. You don't have a unique ID. So we have created a biometric ID that says, this is this individual, these are his biometrics. This is his date of birth, according to him. Yeah, that's very important, Bruce. Where is he located? What does he do? But then you have all of his biometrics. So with that unique ID, you can actually tap into what that individual can do within the market. So the first thing we did was, okay, how do we build a system that starts STP from end to end? So if an issuer is coming to the market, which we've just tested in the last 3 biggest banks that did their offer in Nigeria, all you have to do is just put in what we call your NIN number, which is a national identity number. It populates everything about you that you have registered with the biometric registry company, which is called NMIC. And then nothing changes. That flows to you buying the instruments using your credit card or your bank transfer, because Nigeria's banking payment system has really, really, improved. I was telling somebody last night that it's easier to send money from Nigeria, from a bank in Nigeria to a client in Bank of America than for somebody in the US to send money to somebody in Canada, because I think the processes are quite different and also elongated. But again, because of that ability to process transactions, we are able to shorten turnaround time for transactions to occur, and by extension, because we have a very younger generation of population, they tend to be very, very instant in what they do, whether it's gratification, whether it is settlements or what have you. They like to do it immediately. And I use my son as an example, who says, we still do T+3 in Nigeria, but the idea is that we're moving to T+1 very quickly, and the process has started with our SEC. He says that I don't invest in your market because, if I buy something from Amazon, I get it in the afternoon. If I don't like it, I return it that evening. By tomorrow, I have another one. If I buy instruments in your market, it takes me 3 days to get settled, whether I'm selling, or it takes me 3 days, whether I'm buying, it takes me 3 days for it to deliver. And when I'm selling, it takes me 3 days to sell. So between when I buy and when I sell is a week. So he says the day you start doing atomic transactions, that's the day probably you see younger people. So we understanding that we have a younger population, not minding that the corporates also have their own systems, but by shortening that transaction cycle, you're actually inviting those populations to be part of it. Because some data would have to confirm that I got the day before yesterday says that after the US, Russia, and I think one other South American country, Nigerians trade more cryptocurrency than anybody else in the world, which means most likely you're going to see a fast track in digital assets locally that are going to be produced, and the CSD has to be ready for that. So most of the investments we're doing currently is around enhancing capacity to be able to service that generation of investors, and also by extension, of course, the institutional investors who you have to provide certain services and products and systems that will fit into what they're doing. But more important for us also is around standards. How does an investor come to Lagos and has the same rules and processes that he's used to, whether it's in Italy or in Turkey or in Indonesia, so that he's not rewriting the way he does business in that country? So for us, standards are very important. Frameworks, regulatory are very important, so they're commonalized and based on best practices. So you minimize that, fragmentation, because when you have an investor or the social investor coming into this market, it's the same way he behaves as if he's in other places. That's been our priority in terms of that. Again, with the history of our country, governance is becoming more and more important. And we have to have it embedded in things that we do. So it has to be strong governance. So the investments are actually towards ensuring that you have the right people, you have the right processes, you adopt the best governance possible, and which is why we try and get standard certifications. And I think Thomas More is here. We regularly get rated by them. We hadn't done that much because the pandemic and all of that, but I think they just finished a rating for us. It will soon come out. So those are the things that, if you focus on within the context of your environment, and then, continue to get that collaboration and integration within first your local, and then outside the local, and of course international, that should be able to help. Which is why we consistently work with ESA. I see Colin Parry is also here. I sit on the board of ESA. Again, is to adopt those standards to be able to understand the governance around them, and more importantly, practice them, because that's also very important. What we struggle with is regulatory disparity and, of course, language. In West Africa, my friends in BVRM are writing their rules in French, hardly any interpretation in English. The Anglophone countries don't get to learn English. The French do learn English, and they're more reaching. So those are the kind of contrasts that we tend to work with. But I think as we begin to integrate more and more, the collaboration will be very effective. The results will be that issuers have a wider scope of market to participate, and by extension will drive order flow, which is what everybody wants in markets. And again, tons of liquidity. I'll stop here, and if there's anything like call to action, I'll add that at the end of the conversation. And thank you.
Okay, thanks a lot for your all sharings and your comments. And now, Bruce Butterill, the speech turn is the Executive Director of ACSDA. Please, Mr. Bruce Butterill, I think you have also a presentation. It will be presented to this room as well. Okay, please.
I want to say it at the outset, it's an honor to have been invited to come to Istanbul. My wife and I were here 2 years ago for an extended vacation and fell in love with the country. So it was an honor to be invited to come back. The only downside is my wife is angry with me because she did not come along this trip. Just at the outset, I want to really reinforce something that each of the panelists have referred to, and that's the theme of collaboration. And while some people from the outside may perceive some of these attendance at some of these events as a bit of a boondoggle or extraneous activity, I've worked in this industry. I know I don't look it, but I started with CDS in Canada in 1982. So this is my 43rd year working in this business. I started when we were settling transactions with messengers running around with securities in envelopes and doing our 2-day batch settlements using Fortran computer cards. The world has certainly changed, and I've had the honor of seeing so much of that change come about. But one of the things that, as I've had the luxury of really seeing the world as working in the depository industry, is the importance of that collaboration. And I've developed sort of an axiom, if you will, about these meetings and about collaboration in our industry, and that is quite simply that if you, as management in a depository, are thinking about doing something, it is a virtual certainty that someone else in this industry is doing it already, is thinking about doing it like you, or has tried to do it and failed. And by meeting with those people, you can improve your business and dramatically improve your prospect for success in growing your business. So I am a tremendous advocate of attendance at these sorts of meetings, provided that you take the opportunity to network with your colleagues, not just listen to the talking heads on the stage, but utilize the time here to meet other people and share those experiences. Well, that's my 2 cents on collaboration. Because ACSDA, in addition to being the executive director of the America's Depository Association, who paid for my trip here, I'm also a consultant to a number of infrastructures around the region. So in deference to my client who paid for my trip, I'm going to give them 30 seconds of my slide presentation just to share a couple of things about ACSDA before I move on to my brief presentation. I will say that being thousands of miles from home is somewhat liberating. I'm a little more restricted in what I'm able to say at home in terms of my perception of the markets in the Americas, but there's no one else here from Latin America, so I feel free to express my view, provided that Miguel behaves himself when he returns home to Ecuador. Very quickly, last week, ACSDA introduced a new logo reflecting the digitization of our industry, changing from a logo we've had for the last 25 years. This is the 25th anniversary of the association, and this is the new image for ACSDA. One slide giving a quick profile of what ACSDA is about. It was an association established back in 1999, so as I said, this is 25 years. It was established initially by 13 CSDs in the region, and we now have 31 members, including straight from South Africa, who joined ACSDA about 20 years ago now. Interesting piece about ACSDA, I think, and one of the challenges we face as an association, we have the largest domestic CSD in the world. In DTCC from the US is one of our members, and very sophisticated markets such as Canada and Mexico and Brazil, also part of our membership. But in addition to that, we have some of the smallest capital markets in the world that we are trying to service and support as part of our organization. We operate in 2 languages, both Spanish and English. I'm thankful that I'm able to do this presentation in English and not subject you to my Spanish, which I had to do 2 weeks ago in Argentina. I really want to give you a very 5,000-foot view of some of the developments in America. And I thought it was, I'll start with T+1. As many of you certainly know, there was a major move to T+1 in the Americas that included, obviously led by the United States in May, but it also included Canada, Mexico, and Argentina. It also included Peru for some selective instruments. That had an implication for the Americas as well, since there's a great deal of interconnection in the region, particularly to the Canadian and US markets from Latin America. So there was obviously an implication of needing to make adjustments to operating processes in response to other markets. Something I find particularly interesting, since we've been talking about DLT and other emerging technologies for over a decade, but right now we have 10 plus CSDs in the region that are modernizing their core systems in partnership with a wide range of solution providers, some of which are in this room, but they are adopting traditional solutions. So what that tells me is there is a core belief, pardon the pun, there's a core belief that core systems are going to continue to be traditional systems for at least another decade, because no one develops and installs a new system and replaces it within a decade. So I think that's a dynamic that is surprising to a lot of people. I think the experience in in Australia may have scared some people about some new technologies, but I find that an interesting trend. Market connectivity, integration, and business diversification continue to be the major focus. And I want to talk a little about connectivity and integration. It's been a hot topic for CSDs as long as I've worked in this business, but I think it also leads to some great successes, but some great and large failures as a result. And I have some thoughts on why that is. The first one I want to highlight, and I guess because dating back to the 1980s, I was one of the architects of the link between CDS and DTC in the United States. This link started 40 years ago as a custody link where we literally took physical securities, loaded them into a Brinks truck, and delivered them from Toronto to New York City to support movement of securities that our participants in Canada need in order to settle securities transactions in the US. So it started off as a very rudimentary custody link. That link that started off as a basic custody link is now processing over 1 million trades a day, cross-border between Canada and the United States, and with an average value of 10.7 billion US dollars. And I think the lesson here, and if there was a message to CSDs around the globe, be cautious and prudent about how you connect with other markets. One, it needs to be market-driven, in my view. This isn't a question of you build it, they will come. You need to have identified that they want to go and that you can build a highway to support that business. I think there is countless examples of where links have been built in hopes that that will attract business. And I think we've got the drivers in this process reversed, and we need to rethink the approach. These global links are taking a variety of modalities, obviously, with direct participation, bilateral participation, and connectivity using global custodians. Particularly prevalent in this space, obviously, are Clearstream, Euroclear, and DTCC. A couple of major developments in the region was the creation of the NUAM exchange. This was announced last year. That is the merger of the stock exchanges and the stock exchange groups in Colombia, Peru, and Chile. And this group is now based in Chile and is working fervently on the consolidation and integration of their processes to build a common trading platform for the region, a common clearing platform, but unfortunately it looks like they're not going to be able to get over the hurdle of a common CSD platform. And I'll make a couple of comments generally on that later on. Interestingly, this new exchange, new integrated exchange, will be processing in 4 currencies, each of the domestic currencies of the market as well as US dollars. Latinx in Panama is also ambitiously looking at integration focused on bringing together the markets in Central America, and I won't list them off there, but they're making headway in terms of bringing these markets together and smoothing the ability of investors in each of these markets to clear and settle their transactions in the other markets. They've also developed an iLink process with Euroclear, which allows investors to access custody and transaction processing for Eurobonds. This is just an example of the things that are going on in the region. Certainly is not a holistic view given the 15 minutes that I have, but very quickly, I wanted to also highlight another important theme for CSDs, and that's business diversification. Dating back really decades now, a lot of CSDs have adopted this philosophy that they want to take greater control over their own destiny. CSDs are largely dependent on the volumes generated by exchanges that deliver transaction volume to them. CSDs have clearly recognized that taking a degree of control, diversifying the revenues, stabilizing the revenues, and helping to spread the cost base for their organization across more lines of business is proving beneficial. And this is just a very small sample of some of the things that people are looking at in the post-trade area. The last thing I wanted to say was, and this is the sort of thing I feel uncomfortable saying when I'm at home because it may upset some people. Challenges we face in the Americas, and this would be particularly focused on the Central America, the Caribbean, and South America. Political uncertainty in many markets impacts investor and issuer confidence, which creates challenges in getting traction. People don't have to invest in Latin America, and certainly many investors in Latin America put most of their investment in North America rather than domestically. And the political uncertainty and the rapidly changing political situation in many countries creates a great deal of investor discomfort. The second issue here is probably the more sensitive issue, and one that I feel absolutely passionate about. Latin America has about 3% of the world's capital flows, but has about 23% of the world's market infrastructure. We have absolutely tiny markets in Latin America that are supporting 2 securities depositories. And while it's the philosophy of many regulators and many people looking at the market that believe that competition is good for driving down prices, well, yes, I believe that competition is good for promoting business diversification and service levels, etc. But I've said this before, and people are probably tired of hearing me say it. The worst managers in the world with volume will beat 2 CSDs that are the most efficiently run, operating the same volume on 2 separate systems. Volume is king in this business, and that necessitates us revisiting or constantly revisiting the need for consolidation and elimination of duplication. And I know it's a difficult task. We undertook it in Canada in the early 90s by consolidating 3 CSDs into 1. In 1980, in today's dollars, the cost to clear and settle an exchange trade in Canada was $1.62 in today's money. The cost to clear and settle a transaction in Canada today is 1/2 cent US. That's what volume does. We went from doing 12,800 trades a day in a very physical environment to doing between 3.5 and 5 million trades a day. Volume is king. The other point I would make is reinforcing this point, small CSDs need to respond to the demands of international standards, due diligence, cyber resilience, and technology, and we need to put our heads together on how we can share information and approaches on those things, because the organization that's processing 1,000 shares a day, 1,000 transactions a day, has very similar demands to, from a cybersecurity point of view, for example, of the organization that's processing 1 million trades a day. They just don't have the same revenue base or transaction base to share those costs. One final point, my last ACSDA update. The ACSDA General Assembly next year will be in Cancun, Mexico, in the 3rd week in March, from March 19th to 21st, and you're all certainly would be most welcome to attend. We also launched our new website last week at ACSDA.org. And if you are interested in participating in the monthly webinar series that ACSDA puts on, we run webinars monthly on a very wide range of subjects, and they are free and available to anyone that wants to attend. You simply need to go into the ACSDA website and register your name and contact information on our contacts list, and we will ensure that you get the information you require. So that if there is a webinar that you want to participate in, you're certainly free to do so. I would add that all of the webinars that we conduct are recorded, and the link to the recording is on our website. So you can go and look at the last 3 years of webinars that we have conducted, and you may find subjects that you're interested in. So with that, I think I stayed within my 15 minutes or close to it. Thank you again for the invitation to be here.
Okay, thanks. Thanks a lot. It's really very valuable, your participation and this information shared by you. And during other presentation, we mentioned that almost half of the population are in these countries of these regions. And thanks a lot from coming Americas and also participating in ACSDA's information here made almost this panel and all the summit like a half WFC meeting. So thanks a lot. And actually we are almost finishing. I want to just ask a simple question if you have something more to say, and I just want to point out the thing that what do you think, how can we take for example, a specific topic to collaborate? For example, fastly and concretely, for example, omnibus accounts, we made it alive 4 years ago with regulations, and Euroclear is a member of us, and we are working, for example, with Kazakhstan to make it also possible. And we think that this kind of direct links might be applied so fastly, and we can make that kind of things alive, or technological infrastructure collaborations takes much more time sometimes. What do you think? How can we go on fastly? For example, do you have a specific something as a project, for example? Just if you have, it's not a detailed explanation. The last sentence is Mr. Haruna Waziri. Maybe you have some things to say more yet, please.
Now it's on. What I think is that we need to have, we just signed an MOU between AMEDA and AECSD. I think there should be a framework for joint regulatory committee to look at it, to say how can you make this work, okay? The second is that we should have a task force of policymakers who would sit and try and bridge the gap that we have. We have to have a roadmap for that bilateral or multilateral linkages. We are doing that in Africa, but it should also be something we should do. So 2 or 3 things that are achievable within the context of the bilaterals, but heart of it is the regulatory framework to allow for that, and also have some kind of task force that can take it forward. Otherwise, when we leave here, that's it.
Okay. Okay, thanks. You have another thing from Indonesia, Saudi Arabia, or Americas? If you have last sentences, please. If not, we can finish it. Yeah, please. Yes, please. It's close or not? Does it work or not? Okay.
Yeah, maybe learning from the long-time initiative in ASEAN. I think everybody aware about the ASEAN Fund Passport. It's not implemented yet, for sure. I think some items that I try to highlight here, I think before we explore things to cooperate, apart from the technology cooperation, if we talk about more regional or bilateral connectivity, talking about inflow and outflow, I think each of us has to conquer the fear of having a link, meaning encouraging outflow, right? That's always the fear that most of the countries have when they try to have a linkage to certain country or multilateral. Wow, investors will invest outside the countries. I think we need to conquer that fear first as the FMI. And the second one, I think we really need to involve also, engage closely among FSA, among the regions, not only CSDs, so involved in the close communication with them. And the third one is absolutely like you said, it has to be a technology-driven solution, like execution. So whatever the solution given to the market participant is not creating or adding an additional burden of cost to them. And then the last one is actually harmonization in the legal framework, investment product standard, and also rating standard. For example, I'm trying to take example, mutual fund. Can we try to work together on the mutual fund rating standard across regions? I know it's not easy because in Indonesia we are still working on that. But if we don't address that issue, I think if we're talking about one country or people in other country to invest, for example, to Indonesian mutual fund, it will be quite challenging if the rating itself is not internationally acknowledged or accepted. So I think harmonization in legal framework should be followed with harmonization in the investment product standard as well. So I think that's 2 cents of my opinion, Dr. Ekrem. Thank you.
Yeah, it's Mr. Bandar ALKAHAİL. Do you have last sentences?
Sure. Thank you. Just would like to thank you, the panelists, too, for sharing this interesting information. And maybe last thing I would like to add, maybe I mentioned earlier, add some teams to activate these MOUs for collaborations, but I would like to echo what my colleague Bruce just said, to utilize these events to network with our colleagues and friends. I was thinking maybe we need to add some topics or suggest topics for every association's meeting to discuss, to share knowledge. But maybe this is difficult. Maybe, as Bruce said, networking, utilizing these events to share knowledge and experiences would be actually very beneficial for everyone. And again, thank you very much for having us.
Okay.
Thank you.
Okay, thanks a lot. And Mr. Bruce Butterill, if you have last sentences, please. If not, we can finish.
Just a couple of words. Talk to your customers and talk to your customers and talk to your colleagues. That will give you the information you need to move your business forward.
Okay, thanks a lot. That's a good summary. Thanks a lot. Okay, it was really very great panel to discuss and to share all these experiences. Actually, yesterday you were jogging for experiences. Actually, if you collect all these experiences, maybe it makes 100 years of experiences was shared to the participants. Thanks a lot for participation and your valuable speech. Thanks.
On the stage for a moment because we will have a gift presentation for you all. Okay, I think I've gotten my voice across. Can I ask you to stay on stage just for a moment while we have a gift presentation for you? Now, for our gift presentation, I would like to invite Vice Chairman of the Capital Markets Board of Turkey and Chairman of MKK, Mr. Ali İhsan Güngör. Welcome. And now our gifts will begin to come through. Perhaps we'll begin from the very top, from our first panelist, Haruna JALO-WAZIRI. And we'll keep you there for a photo as well. Thank you very much, Mr. Haruna JALO-WAZIRI. Next up, can we invite Mr. Bruce Butterill to receive his gift? Oh, it's a bit heavy. And now we'll invite Miss Imelda SEBAYANG to receive her gift. Oh, Imelda. Imelda. Evet, evet. And now our last guest to receive his gift, if I could ask you to come over here as well, Mr. Bandar ALKAHAİL. And now we also have a gift. Yes. Now we also have our last but not least gift for Dr. Ekrem ARIKAN, also to be presented by Mr. Ali İhsan Güngör. Yemek arasını